Today, I'll be taking you through the indirect method system of cash flow presentation. The difference between this and the direct method is just on the operational side of things. The other two components required by IAS 7, International Accounting Standard 7, is the investment and the financing activities section. They are both the same. This section are the same for both the direct and indirect method. All right. It's just this operating activities section that is different. In the other one, we deal with it. I will quickly highlight it later to you. This one will start from the figure of income statement. It starts from the income statement figure, either the profit before tax or the profit after tax, whichever you're more comfortable to deal with. So as usual, let's head this statement again. We're going to head it to show that it's the indirect method. Another necessary heading is like the operating activities section, which we need to do today. And another heading is that the working and then the currency sign we need to apply here. Before we start, I have to pick the figure I will be starting from the income statement. You have a choice of which figure to choose. I normally choose the bottom line, that profit after tax. You can choose the profit before tax. Makes life easier, but I choose profit after tax. So I'll put out here the figure of profit after tax, which is 138,500. And this shows that it's from the comprehensive income statement, CIS. After that, I will now head adjustment for items not involving the flow of cash, which is add or deduct. So I simplify it by saying adjustment for, and under this, I will now put the items and put them whether they are deduction, application, or their source. Once this is done, I will now go to my additional information, which is here. I will walk through and begin to pick items that do not involve the flow of cash. The first one here I come across is depreciation. This is not involving, it does not involve cash, and I will add it back. So this depreciation charge, add it back. It's add back. Salary is in the profit or operating profit figure already, and then we don't have to do anything on that. Loss on disposal of equipment is a non-cash item. We have to add it back just like depreciation again. So still note 1. They are all from note 1. 10,000 add back. Looking again, I can see I'm only looking at for operating items, not financing or investing items. As you can see, the other items here are all either investing item activities, which is asset, purchase of asset, disposal of asset, and dividend again is financing. So I don't have anything to do with this here because they will be treated down below here, either under investing activity or financing activity. So I will now move on to my income statement, which is here. I will begin from item that does not involve cash here. Every other thing like the sales, all of them will be dealt with when I come to working capital movement. The cost of sale will be dealt with under working capital movement, and so on. Interest, I will add back because though I know it's been paid because there was no closing figure, neither were there any opening figure in my balance sheet. So it is paid. But I'm just going to put it here for academic points only. So interest charge, I put it here as add back. Okay. All right. Okay. Then the other one I can see is tax. I know there's a working for tax which we'll be going to later, but for academic point again, I'll add it back again because it's just a provision and we need to know how much is paid. Because as we can see in the balance sheet, there is opening figure there. It will be in working later. Once this is done, I will now add my balance here. Total of this is 71,500. I will now extend it as adding it to the profit after tax to add them back. The next thing to do is the movement in working capital, as I told you about the sales, cost of sales. They will be handled here. To do that, I will go to my statement of financial position, which is starting from the asset side. I don't have to do anything with the cash because that's what we're looking, and that's our target, which is here, as you can see here. I will now go to the receivable. So I will now say, put my receivable there. What you need to know here is any increase in receivable is an application, means that you've given loan to your debtors, interest-free loan. Any decrease means you've collected, it will be a source. Now, for inventory, any increase in inventory will be an application, means you've bought more. Any decrease in inventory means you've disposed of them, is a source of income. And when this is liability like the payable, any increase in payable means you have taken credit from your supplier, is a source. Any decrease in payable means you've paid them, that's application. Let's move on. Remember that. So now for receivable, I post that now. You can see it's an increase, which is application. All right, we've given them loan interest, so application. So 15,000 from 50, it has increased to 65. 15,000 difference is an application. The next one is inventory. What is it? It's a decrease from 90 to 60. It means we've sold. It's a source. We've disposed of stock. It's a source of income. Now, other thing are investing activity. We don't have to do look at the remaining. So let's go to the liability side. Payable. Let's pose the payable. Look for the difference. The difference is a decrease from 40 to 30. Decrease means you have paid. Application. You have paid your suppliers. Application. Payment means application. Receipt means source. The next thing here is tax liability. Remember, I told you that tax will be dealt with separately. Okay? We're going to deal with tax after our generated. We like to do it below the generated activity cash flow statement. Bank loan is a capital. It's going to be dealt with somewhere there under the financing, and then share capital as well, and retain earning. So once this is done, we now have to close this side to start with. Okay, so we add this to this, that 25. We deduct it from the source and give us a net increase of 5,000. Okay, so what we need to do now is to add this to know the figure generated from operation. If you do that, okay, it shows this, all this, to put this point, give us 215,000 generated from operation. Now, next is to now look at our tax. Remember I told you our tax in the account is 1,500. There was no brought forward and there was no carry forward. Means that tax, interest, has been paid. So, interest paid. If you look at working 6, you see it is so. Now, the tax, so this must be in working 7. Put it working 7. The tax is the working 6. All right, I'm going to show you that eventually. Tax is working 6. All right. So if you come to my tax, I will take it to working 6. So that is 50,000. which is here, working 6. 6 here, which is tax paid. All right, that's the tax paid from the working. That's why we slot it there. Okay, tax paid is 50,000. They are all application. We close that off again. These two give us 51,000. Bring it here and extend it here. Okay, 51,500. Deduct it from the positive figure there, and we're going to get a balance of 163,500. This is exactly what we have when we did the direct method. Direct method, which is this. Can you see direct method? That's the amount we got there, because you can see there are kind of fewer items here. All right, 163,500. Now the same for our indirect method. Okay, so that's it. Now, if you have enjoyed what you watched, give us a thumbs up. And then if this is your first time of joining me, please do subscribe. Okay, it would be nice if you do that for me. That will encourage me get more subscribers to keep on doing what I can, try my possible best to prepare some materials for you. And then please do not forget to press the notification bell so that you will be the first to be alerted once my new lessons or material comes up. Until then, remain safe and goodbye.